Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar trades back to the bottom side of a broad support that you can see here is around 69 cents. We did stab there just a couple of days ago, and also we did have another try there in January. Looking at this level, it is a key point, anywhere from around 69.30 to about 68.75, just in case we see a little bit of slippage. The ADX is trending to a bear case. The RSI and the MACD are married up to support the bear case. In economic data, Australian inflation offers limited support, while the broad US dollar edges around 99 figure 40 area. Looking at the inflation in Australia, which eased to 3.7% year on year, with core measures steady, though the data predates the recent energy shock, keeping inflation risks elevated and policy cautious. Geopolitical uncertainty also holds, and shifting expectations around the US monetary policy continues to dominate, leaving the Australian dollar vulnerable despite stabilising just above this support line. It is viewed from a weekly bias that the market could break lower and therefore look towards somewhere around 66 to 66.5 cents, only due to the current technicals with this gravestone doji that has a long tail and does give some concern that the bear case can continue. So let's see if the market can reverse or penetrate this bottom side of the range and see further losses. Looking at the euro, well, the market failed to ignite any bullishness after the two engulfing candles, and there is still a little bit of risk to the downside. I feel that we may see a move towards the region of 114.5 and reassess from there. And from the broader scale, keep an eye on this previous call that was around 113.5. Technicals are soft on the weeklies and also on the dailies. Dollar yen, well, once again, the market is determined to push higher, and there is still some divergence here, and therefore supporting the bearish case as I feel towards 156. Little to the upside, I feel, can sustain, and a bull trap may be seen, and let's see if it does play to the downside. Having also seen two engulfing candles, well, the market is weak for the sterling and now looks towards the region, I feel, of 133 to about 132.30.5. Let's see if the market does play towards the downside. I still feel the risks, because of the technicals are weak, is bearish. And also the recent rejection from 4,100 rallying and now looking a bit soft again into the European session. As we can see, we're getting a bit of a plummet here after a price up around 4,540 is now over 100 points lower. Market is still very nervous, and I still feel that from a technical point, I'd rather sit out until I get some indication of where this direction can eventually lead to. We're getting a small bounce here after breaking through 90 and now looking back towards that top side around 91.80 to around 93.5. Let's see if the market does reject there again. I'm a little bit cautious after all this divergence that the bears may eventually come back again. Well, that's a wrap. Thank you for joining me, and as always, look out the intraday report. I hope you enjoy the great start to the day.